What is up, guys? We are back with a trade breakdown. I want to show you guys how I took this trade, giving me a 5-to-1 risk to reward ratio and 100 pips take profit, which I actually scaled up to 140 pips in profit. So, the first thing I want you guys to look at is this break of the MA, right? We had a break of the MA. Let me actually zoom out a little bit to show you. How does this look like? All right. So the reason why we took this trade is basically we had this break of structure on this level over here, right? So most traders these days, they wait for a break of structure to go long, and they would simply have their stops over here or even here. Most of them will have their stops around this area, right? And now because they've seen this break of structure, they think that the price is going to shoot to a new all-time high. So it's the first thing is like the way you think about it, right? So let's say they use their Fibonacci, they find some confluence over here, maybe they have a trend line or something going on. Basically this is a trend line, or maybe they have this trend line on, or even this trend line on, right? So that's just my perspective from someone who trades against a profitable trader. Always trades against retail traders, right? So this is always the position you want to be in. So the first thing we had is on the lower time frames. Of course, like this is the big image. This over here is basically a local top. This is the all-time high of gold. And as you know, gold has been extending all the way up for months now, for months and months and months. So the move to the downside has very little resistance. It's just that what they were trying to do is bait the retail traders into going long over here on these levels, right? So because they had this breakout, they have this confirmation of a continuation of this breakout. Price pulled back, it bounced off the 50 MA. Let me actually show you. It bounced off the 50 MA. We had a hammer candlestick. So all of these things are just signs that retail traders are literally just going to try to long this thing. I was looking for sells, especially after the news. The news came out a little bit negative for the dollar as well, which boosts the amount of liquidity trying to buy these dips, right? So this was a liquidity, I was targeting the liquidity on basically these lows. This is the liquidity level on my fib. And basically what I did is I entered on the break of this MA plus this entire zone, which is a very nice confluence on my fibs as well. So we basically broke a very important level of structure, broke the MA, and basically I knew then that the price is going to hit my stop loss. Basically all the retail traders' stop loss. Not my stop loss, because my stop loss was over here. But their stop loss is over here, and they're gonna be buying this trade all the way, like when it's pulling down all the way to my basically take profit. So as you can see, the price bounced really nice after reaching this zone. And basically over here, I decided to add in one more position just because we had another break of a very important level over here. As you can see, I've marked it. It's a fib level. As you can see, it's a 61.8 and another the 38.2 on the bigger fib, right? This is the bigger time frame. This is why I always like using bigger time frame objects, just because they're much more reliable and they're stronger. When price breaks a 1 minute fib levels, it doesn't mean much, but when it breaks a daily fib level, it does mean something, right? Especially on the 1 minute and the 5 minute time frame. So basically I added another position over here. Once the candle closed down here, I set my stop loss at break even because I knew I was waiting for a push. Basically, if price started pulling back a little bit, that's when if price pulled back to this area, then this area is pretty obvious. A lot of people are going to try to short and join the move, which basically changes the probability of the trade, and then the price is more likely to bounce off of that level, right? So this is basically how I found this trade. It's not magic. It's just that you have to stick to your plan. You have to realize what's going on. you have to dissect the market, price action, and the overall sentiment. We had, let me actually give you my confirmations on this trade, right? One, economic event, basically the GDP release. It was negative for the dollar. We had the initial reaction, right? We had this reaction, 140 pips. Second confirmation is price forming a new high, but it didn't break out to an all-time high, but failing to break out to a new all-time high, right? And we have the 50 MA broken plus the hammer candlestick also being basically, it was basically engulfed by these two candles over here. 1, 2. Basically, they engulfed this candle and basically assuring that we are actually going lower. A break also, we've broken fib levels, lower time frame plus higher time frame, right? And also aligns with the overall market direction, because the market has been going up like crazy for months and months and months. So this move just aligned with the overall direction, because we've had so many pushes to the upside with very little sell-offs, if that makes sense. So it just made sense that right now is the time, because a lot of people are positioned to buy this dip, and we took advantage. All right, guys. So I hope you guys found value in this. I'll see you on the next one. Peace.